The conduct of Employees' Provident Fund in purchasing government securities in the secondary market has cost the state a significant benefit. This was revealed at the Presidential Commission of Inquiry today. Zulfiq Farzan reports on Bondgate.
The cross-examination of former governor of the central bank Arjuna Mahendran continued today as well. Today it was suggested to him that the Employees' Provident Fund, rather than making bids and purchasing bonds at the primary auction, had resorted to purchase the very bonds on offer at the secondary market from other market parties. It was suggested that if the Employees' Provident Fund had not purchased those bonds in the secondary market and actually purchased the bonds at the primary auction, they would have made a better profit. Deputy Solicitor General Gunatilaka said the government would have had the benefit if the EPF purchased government securities directly at the primary auction and not the secondary market. Gunatilaka pointed out at times the Employees' Provident Fund had sold bonds at a lower price and purchased them back at a higher price. Some of them were to perpetual treasuries, which used Pan Asia Banking Corporation as an intermediary. On Friday, former central bank governor Arjuna Mahendran said he was in possession of a confidential IMF report which recognized unidentified government liabilities of over 1 trillion for 2014. The Attorney General's department said not a single IMF report or statement for 2015 indicated any such liability. Mahendran went on to say the Treasury Secretary had from time to time been presented with unpaid and unexpected bills after the mini-budget in early 2015. The Aegis department said if the Treasury Secretary wanted more funding, it should definitely reflect in the cash flow statements. Senior State Counsel Shahida Bawiz said the central bank was compelled to print more money, partly because of the abrupt decision taken by Mahendran as governor to suspend direct placements, and he should be responsible for that. However, Mahendran said as the government of Sri Lanka was borrowing heavily at the time, the markets had pushed the interest rates higher. The Attorney General's department said the supervision mechanism of raising public debt was in complete limbo during Mahendran's tenure until the supervision of the Public Debt Department was moved under the Department of Supervision of Non-Bank Financial Institutions. Mahendran said moving from a hybrid system to an auction-only system was a simple matter that did not require extensive discussions. However, it was mentioned to him that the Monetary Board at present has ruled a full auction system was not suitable for Sri Lankan market, and it had extensive discussions with the US Treasury and the World Bank on the matter. It is worth remembering, on the 17th of March 2015, addressing Parliament on the bond issue, Prime Minister Ranil Wickremesinghe made the following statement.
I insisted on a public auction because private placements have led to corruption and lack of transparency.
The Monetary Board has moved to a hybrid system during the past month, and this comprises of a series of phases. Accordingly, bids at reasonable yield rates will be accepted, which will be followed by a voluntary volume-based bidding process for the excess requirement of the PDD.